So guys, we are done with almost all the concepts of advanced capital budgeting. A quick recap before others join. The first thing that I told you what are the techniques that we have learned? Statistical techniques. Under statistical techniques, guys, it was computation of standard deviation, probability and coefficient of variation. You compute standard deviation, guys, वहाँ पे under two ways. Either they will directly give us multiple NPVs or they will give us different cash flows for each year. If they're giving us multiple NPVs, you will directly compare those NPVs and get standard deviation. But if they give us different cash flows for each year, guys, I said that two scenarios possible. Either the cash flows are independent or the cash flows are dependent. By default, we assume that the cash flows are independent. That is where we use Hiller's model in order to arrive at standard deviation. To compute standard deviation of the NPV of the project, you will need to compute standard deviation of each year's cash flow first. And how will you arrive at variance of the overall NPV of the project? Formula at the end. Variance of first year divided by 1 plus r whole square. Variance of second year divided by 1 plus r whole power 4. Variance of third year divided by 1 plus r whole power 6, and so on. That is how you will get it. Are we clear? And then, guys, we did conventional techniques. What were the concepts that we've done under conventional techniques? No, that was under other techniques. We did risk adjusted discounting rate and certainty equivalent factor. This is what we did, guys. Either you adjust the discounting rate as such, guys, for the amount of risk that is involved in the project, or you remove the risk from the cash flow itself by multiplying the cash flow by the certainty equivalent factor, and then discount those cash flows, guys, at risk-free rate. Under the other techniques, guys, we did sensitivity analysis, we did simulation, we did scenario analysis, decision tree. उतना ही था बेटा. Under sensitivity analysis, we try to measure the impact of change in each variable, guys, on the overall NPV of the project. Under scenario analysis, we take multiple changes in variables at once, guys, depending on the macroeconomic conditions prevailing. Under simulation as such, guys, we check randomly as such beta as to what can be the possible NPV. Remember simulation, random numbers are assigned, and then based on system generated random numbers, we decide as to what will be the value of the variable that is selected. Decision tree is just a graphical representation of the different scenarios that are possible, guys. And इसके अलावा बेटा we did capital budgeting with inflation नहीं हुआ है, और क्या कहते हैं optimum replacement cycle, and then, guys, adjusted present value and utility theory. Adjusted present value क्या है? वही है. You divide the overall NPV into two components. One is base case NPV, the other one is tax savings on account of interest or any other cash flow related to capital structure. You should not consider anything that is being paid to the providers of capital, guys. But on account of that, if there's any other inflow or outflow, that should be considered. So you compute base case NPV only on account of operating cash flows, and then beta you take tax savings on interest. You can assume that the debt is perpetual and write tax savings on interest as debt amount into tax rate. याद आया कुछ? Now write the side heading, guys. Capital budgeting with inflation. Capital budgeting with inflation. There are two concepts here, guys, as in two ways of arriving at the NPV of the project. We all know that the cash flows that are generated by a company, guys, year after year will get also affected by the amount of inflation rate. Even if a company's sales volumes are not increasing in absolute terms year after year, their revenues and costs can still increase on account of inflation. So even if their sales volume are flat as such, guys, there can still be an increase in the overall revenue of the company, guys, and that is on account of inflation. इसलिए अपन थोड़े दिन पहले बात कर रहे थे, guys, if the real growth is about 5-6% and there's an inflation of about 4%, that means for sure there'll be a nominal growth of 10%. Year after year, you will see that the earnings of the companies will keep increasing by at least 10% on an average. So यहाँ पे, guys, because the cash flows can change year after year on account of inflation, to arrive at the NPV, we can either discount real cash flows at real discounting rate, or you can discount nominal cash flows at nominal discounting rate. You either discount real cash flows at real discounting rate, or you discount nominal cash flows at nominal discounting rate. By default, the approach that we follow, if they give details of inflation, is to discount nominal cash flows at nominal discounting rate. Whatever chapters that we have done so far were all nominal cash flows at nominal discounting rate without realizing it. Because when you make an estimate of the cash flows that is going to prevail on a later date, guys, you are not computing real cash flows. You're all arriving at nominal cash flows only. And when you say that the interest rate prevailing in the market is 6%, 7%, is that real interest rate or is that nominal interest rate? Nominal interest rate. That's already incorporating inflation. So by default as such beta, we always consider nominal cash flows and we discount them at nominal rate. If the question specifies, then we will have to remove the impact of inflation from the cash flows and then consider real cash flows at real discounting rate. So if the question specifies to discount real cash flows, you will have to consider real cash flows at real discounting rate. Now, most of the cash flows as such, guys, are going to increase proportionately with the amount of inflation, except for tax savings and depreciation. Tax savings, depreciation as such, guys, is a non-cash expenditure. It is apportionment of the historical cost that you are incurring at the beginning. Let's say that you're buying a machine for an amount of 1 crore rupees and that has a useful life of 10 years. You're going to write off this 1 crore rupees every year for the next 10 years. Let's say depreciation per annum is 10 lakh rupees. Abhi beta, you are not going to get a higher tax savings on account of inflation. The tax savings will still be, if the tax rate is 30%, I will get 30% of 10 lakhs. How much is that? 3 lakh rupees. Haya na guys. We will get a tax saving of only 3 lakh rupees. We are not going to get a different amount of tax saving. Is this increasing along with the amount of inflation? No. All the questions that you've done in CA intermediate as such, guys, did you ever adjust tax savings on depreciation with the inflation factor? No. That means under nominal cash flows also, we will consider a tax savings of only 3 lakh rupees. समझ में आ रहा है क्या बोल रहा हूँ guys? By default, we follow real approach or nominal approach? Nominal approach. Under nominal approach also, the only item that is not increasing with inflation is tax savings on depreciation. Yes or no, guys? Earlier when we were students, guys, we used to consider the same amount under real cash flows and nominal cash flows. That means whether we are considering real cash flows and real discounting rate or nominal cash flows or nominal discounting rate, we used to consider tax savings as only 3 lakhs. Doesn't matter which approach are we following. Which means that the NPV under both the approaches would have a difference. See, let's say beta that your real cash flow is 100 and the inflation rate is 5%. So the nominal cash flow will become 105. Let's say that the real discounting rate is 5% and let's say that the real discounting rate is 10% and the inflation rate is 5%. So what will be your nominal discounting rate? 1 plus real rate into 1 plus inflation rate. Did we come across this anywhere? Kahan pe? Forex chapter, interest rate parity theorem. It is based on nominal interest rate. There was a question, guys, in which they've asked us to compute real interest rate using nominal interest rate. Kuch yaad aa raha hai? Interest rate parity theorem. So how much will be your nominal discounting rate? This will be 1.155, huh? सपने देखो रे तुम लोग. All right, beta. 1 plus real rate into 1 plus inflation rate, 1 plus 0.1 into 1 plus 0.05 will become 1.155. So your nominal rate is such beta. This is 1 plus nominal rate. Therefore, nominal rate as such, guys, will be equal to 15.5%. Nominal discounting rate is going to be equal to 15.5%. Any doubt in this, guys? Yes or no, beta? Now, whether I discount real cash flow 100 at a rate of real discounting rate or whether I discount 105, that is nominal cash flow, guys, at nominal discounting rate, the answer should be same. Practically socho, in the numerator I have multiplied 1.05, in the denominator I have multiplied 1.05. Don't you think it should come back to the same value? Yes or no? So practically speaking, whether you follow real approach or whether you follow nominal approach, you're supposed to come back to the same NPV. Yes or no? But when we were students, the answers were different. And we used to write that as the note also. There was used to be a separate requirement asking us to compute why is there a difference between these two. Why was the difference better back then? Whether it is real approach or whether it is nominal approach as such, guys, we are taking tax savings on depreciation as 3 lakhs only. Are we not taking the same cash flow but discounting at different rates under both the approaches? Now finally the concept has been revised in the ICI materials. They say that 3 lakh rupees will be considered only under nominal approach, not under real approach. You want to consider real approach mein cash flow, remove the impact of inflation from that 3 lakhs first. It says getting 3 lakhs after a year is not the same as getting 3 lakhs today. So we will remove the impact of inflation from that. How will you remove the impact of inflation? Let's say beta that 3 lakhs is the tax savings on depreciation. By default, this is nominal cash flow. I will write divided by 1.05. This will become my real tax savings on depreciation. 2 lakh 85,714. Now I am going to discount 2,85,714 for year 1 at real discounting rate. So basically, if you follow this approach, there should not be any difference between NPV under real discounting rate or under nominal discounting rate, because every cash flow is being adjusted for inflation. Earlier we never used to adjust tax savings on depreciation, but now we are adjusting tax savings on depreciation as well. Are you all understanding the point, guys? I repeat, all you have to know is under capital budgeting with inflation is that there are two approaches to be followed. You either consider real cash flows and discount them at real rate. That is, you do not consider inflation in any of your cash flows. You do not consider inflation in your discounting rate also. Let's not forget, but a real discounting rate is going to be significantly low. Real discounting rates cannot be high as 15-20% as such, better. Real rates that people generate are significantly lower. In developed countries, it is closer to 1-2% only. India may be better. If you take only interest rate, it should be closer to 1-2%. So you take real cash flows, you discount them at real rate, or you take nominal cash flows and you discount them at nominal rate. By default, which approach? Nominal. Every chapter we have been doing this only, or I might have given you a note, guys, even in equity valuation, that we always consider nominal cash flows and we discount them at nominal rate. Equity valuation ke time pe, I'm pretty sure I remember usme likha hai tha. So you always consider nominal cash flows and you discount them at nominal rate. When you compute present value of dividends, guys, they're all nominal cash flows. No one is compensating you separately for inflation. Is that clear? Now, one thing that you will remember better is tax savings on depreciation does not increase along with inflation. So that figure of tax savings on depreciation that we are getting will be considered only under nominal part. You want to consider that under real. What will you do? Remove the impact of inflation. So any cash flow that you are investing today and that is expected to remain same under nominal approach, you are supposed to remove the impact of inflation. Just say you will see one more adjustment, working capital. Whenever working capital is given in capital budgeting decisions, what are we supposed to do? Working capital in capital budgeting decisions. We have done that in free cash flow model. I told you what is the significance of working capital. Usually working capital remains constant. That is why you take it as a part of initial investment. Every year increase in working capital will be zero. So there's no outflow on account of working capital. End of project life, working capital will drop down to zero. So you will take it as a part of terminal cash flow. Let's say that I put in 6 lakhs as working capital in year 0. Year 1 working capital remains at 6 lakhs. Year 2 6 lakhs. Year 3 6 lakhs. Year 4 end of project life, working capital drops down to 0. This 6 lakhs is my initial investment. Year 1 0 investment. Q0 investment. There's nothing more that you're putting in. It's the same initial 6 lakhs as such, guys, that is continuing. Year 2, guys, 0 investment. Year 3, 0 investment. Year 4, inflow of 6 lakhs. You always consider, iska logic you've learned beta under cash flow statement. So what happens in year 4 beta is, though you are selling inventory, you're not buying inventory worth 6 lakhs. Earlier stocks you are selling now. That is the logic as to why we take it as inflow. Won't there be sales occurring in the 4th year? But are you buying inventory worth 6 lakhs, or did you already have a stock of 6 lakhs? So to that extent, we do not have any outflow only. Profitability statement, when you prepare, you will write minus COGS as 6 lakhs. You are reducing your profit to the extent of 6 lakhs. But there was never an outflow of 6 lakhs on account of that inventory, because we never purchased inventory. That is why under working capital changes, cash flow statement, you will write decrease in inventory and write that there's an inflow of 6 lakhs. Are you getting the point better there? Now, if there is working capital also, guys, it is remaining constant. Is it remaining constant? As an entity, beta, you are losing out on account of inflation also. You cannot discount this at real discounting rate. If you're discounting this at real discounting rate as such, beta, your cash flow present value will get distorted. Shouldn't you discount this also at nominal rate? But if they give real discounting rate in the question, what should I do first? Remove the impact of inflation from this 10 lakhs and then discount it at, I have no problem if you directly discount it at nominal rate. But अगर question में nominal rate नहीं है, or if they're asking you to follow real rate, then what should you do? पहले remove the impact of inflation from this. If it is after 4 years, I will write divided by 1.05 whole power 4. This is removing the impact of inflation. Then the leftover value I will discount at real rate. Real rate abhi. It is as good as you discounting it at nominal rate directly. But that presentation will not be allowed. If the question says follow real discounting rate. Are we clear about this? I will give you notes beta in a proper way for this. But then I had to also discuss this question for the previous batch. Sabko concept समझ में आ गया? Can I solve a question first and then give you notes? मेरे को वो break नहीं चाहिए बेटा class में. I want to give this particular question to the last batch students. Most of them had doubt in this question which came in May 25. Alright? ठीक है? Let's all read question number 38, guys. After that, we will write notes in the concept notebook. All the previous batch students, if you still have any doubt, beta, you can ask. Let me start solving this question first. So, BC Limited is contemplating on buying a new machine at 70 lakh rupees with an additional working capital of 10 lakhs. The machine is expected to have, did we all open the books? So the initial investment beta is 70 lakh rupees, working capital requirement is 10 lakhs. The machine is expected to have an economic useful life of 5 years with no salvage value. Company follows straight line method of depreciation and the same is accepted for tax purposes. The machine is expected to generate an incremental increase in the before tax operating income per year for a period of 5 years. Before tax cash operating income. Until this is profit before depreciation and taxes. This is profit before depreciation and taxes. Are we clear? Normally from this you would deduct depreciation. You will deduct taxes, add back depreciation. What we will do now is from this deduct taxes directly, but consider tax savings on depreciation separately. Same thing. Let's say your profit before depreciation and taxes beta is 10 lakhs. Depreciation is 4 lakhs. So profit before tax would be 6 lakhs. Let's say that the tax rate is 30%. And 1 lakh 80. Your profit after tax beta will become 4 lakh 20,000. You add back depreciation worth 4 lakh. That will be 8 lakh 20,000. Any doubt in this part? Alternatively, I can write profit before depreciation and tax 10 lakhs minus tax in the 30% beta directly 3 lakhs. So this profit, guys, after tax will become 7 lakhs. To this I add back tax savings on depreciation. How much is my depreciation, guys? 4 lakhs. 4 lakhs per 30%, 1 lakh 20. Will I still come back to the same figure? I'm going to follow this approach in this question because those cash flows are in real terms. But tax savings on depreciation is a nominal cash flow. It does not increase with inflation. So that is why it will be considered as a nominal cash flow. So that is why we will have to follow the second approach. Are you getting the point? Any doubt in this? You will directly take those real cash flows. From that you will deduct taxes and then beta you're going to discount it. Okay? Next. The relevant tax rate is 35%. Inflation is expected to be 6% per year and the firm's cost of capital in real terms is 10% per year. 10%. Assume that the working capital requirement will remain unchanged throughout the period in spite of inflation. By default, guys, we assume that the working capital requirement is going to remain constant. That is why working capital is always taken as a part of initial investment and then directly considered as a part of terminal cash flow. Are we clear about this? Now, advise the company whether the machine should be purchased or not. Show your NPV calculation in real terms. Underline that real terms. All the other questions, guys, on capital budgeting with inflation are fairly simple because all the questions are take nominal cash flows, discount them at nominal rate. So itna lafda aata hi nahi. You directly adjust cash flows until they will give real cash flows. You have to add inflation, directly discount them at nominal rate. Even this is a simple question. So the only important part here, guys, is what? You will have to discount all the cash flows beta at nominal rate. Question number kya hai beta ye? Huh? 38. The previous batch students, guys, this is May 2025 question. You can access the document from the website. Huh? So what will you do, guys, here is there are few cash flows already given in real terms. What is that cash flow? Our operating income of 25 lakhs. What is still in nominal terms as such, guys, is what is still in nominal terms? Tax savings on depreciation and working capital. So you should not forget to remove the impact of inflation and then discount them. Are you getting the point, guys? It is important as such better that you remove the impact of inflation and then you remove the, or it is as good as you discounting them at nominal rate. Because the requirement is to compute. This was the only question where the requirement was to compute in real terms. There were other questions to compute it in real terms, but there were no taxes only. If there were no taxes, there were no tax savings on depreciation. तो तुम nominal करो, real करो बेटा, answer तो immediately वही आने वाला है. So what you have to remember बेटा is tax savings on depreciation is a nominal cash flow. Yes or no? And then working capital is also a, it is not changing. Is it changing anywhere as such, guys? So that will be considered as a nominal cash flow. We are supposed to remove what? We are supposed to remove the impact of inflation. Remove the impact of inflation, guys, from these cash flows. Sun lena, I'll give you time to copy later, beta. Any doubt in this, guys? Now, first, beta, my initial investment, no change in this because this is occurring in year 0. Real nominal doesn't make a difference. Real nominal will all make a difference, guys, when you're talking about subsequent year cash flows. As on the current date as such, guys, it will not be, there will not be any difference. What is the investment in plant and machinery, equipment? Investment in equipment, guys, is 70 lakhs. How much is working capital investment? Working capital investment, guys, is 10 lakhs. Put together, but the total amount is 80 lakhs. This is the amount of your initial investment. All right. What will be the amount of depreciation per annum? It will be 70 lakhs divided by 5 years. No salvage value, right? 14 lakhs per annum. I already told you that I'm going to follow the alternate approach as such, guys. Abhi better. Periodical cash flows. Profit before depreciation and taxes. Is this in real terms? This is in real terms. Do you have to remove the impact of inflation from this? No. How much is this beta? 25 lakhs. From this, I am going to deduct taxes at the rate of 35%. 35% beta would mean 8 lakhs 75,000. Kitna bach jayega, guys? 16 lakhs 25,000. This is my cash flow, but without tax savings on depreciation. Are we clear about this, guys? Tera phone baja. Alarm kiska baja beta? This is your cash flow, guys, without tax savings on depreciation. Any doubt in this? You can directly discount this beta at real rate. I am doing this beta. Present value of cash flow 16 lakhs 25,000 multiplied by, can you tell me what's the real discounting rate? Huh? Question में दिया हुआ है बेटा 10% for 5 years. एक बार वो please factors add करना question के. When factors are given in the question, guys, please add them. Do not compute them again, guys. हाँ बेटा 3.719. How much will this be? हाँ 58,000. Any doubt so far? This is present value of periodical cash flows, guys. After that, better tax savings on depreciation. Now this is going to be a little tricky part. Your depreciation per annum is already written, but tax savings on depreciation, guys, per annum would be how much? 14 lakh rupees के ऊपर 35%. 4,90,000. Is this a nominal cash flow or a real cash flow? Very good. I've been insisting on that, Asad beta. Please follow that. Now, your 1, 2, 3, 4, 5. Tax savings 4,90,000 in nominal terms. Now, beta, first I will take inflation factor. Did they give present value factors at 6% also? Inflation के लिए beta discounting. What is the present at 6%? What's the factor for the first year? 0.943. Next 0.89. Next 0.84. Thank you. 0.792 and 0.747. Once I multiply with these factors, what will I get beta is real tax savings. मतलब tax savings in real terms. It was not that these were fake tax savings. Multiply beta and tell me what are the real tax savings. एक जना बोलो 4,90,000 into point. तो लास्ट वाला बोल रहा पहले. फर्स्ट वाला कितना है 4,620,070. थोड़ा जोर से बोलना बेटा. नेक्स्ट वाला 4,36,100. Next guys 4,90,000 into 0.84 बेटा. 4,11,600. Next 3,88,080. Next 030. Now this I will discount at what rate? Real rate. Present value factors beta at 10%. This is discounting at real rate. 0.909, 0.826, 0.751, 0.683 and 0.621. You will get PVCI, guys. Can you just multiply and tell me the sum total, guys? $15,81,715. The value as such, guys, will become 15,81,715 rupees. Are we clear about this? Abhi, guys, is there any other cash flow that I'm yet to consider? Release of working capital. Terminal cash inflow. I'll write terminal cash inflow, guys. Terminal cash inflow. Working capital, guys, realization. How much did we invest in working capital in the beginning? This was supposed to be discounted at nominal rate, but then they gave real rate in the question. So what will you do beta is first remove the impact of inflation. Working capital realization in real terms. Please multiply with the same factors that are given in the question. In real terms. So that will become 10 lakhs divided by 1.06 whole power 5, which is 10 lakhs into 0.747. That divided by 1.06 whole power 5 value is already given in the question, guys, as 0.747. So 7,47,000. Now compute present value, guys. That will be 7,47,000 divided by 1.1 whole power 5, which will be 7,47,000 into 0.621. Alternatively, directly discount 10 lakhs at nominal rate. Answer वही आएगा बेटा, but I suggest do not follow that presentation in the examination. See, if you discount real cash flows at real rate, nominal cash flows at nominal rate, you're going to come back to the same value. अभी सुबह पढ़ाते समय मैं बोला, it doesn't make any difference. You are going to come back to the same value. But for presentation, it is mandatory that you show like this. You first remove the impact of inflation separately and then you discount them at real rate. How much will this be? 4,63,887 guys. Now we can compute NPV guys. PVCI mein present value of periodical cash flows we have computed. The present value of periodical cash flows beta was 61,58,000. 61,58,750. Then we did present value of tax savings on depreciation. How much is present value of tax savings on depreciation? 15,81,715. Then we did guys present value of working capital. Present value of working capital beta was how much? 4,63,887. How much is the sum total of all of these guys? 82 lakhs 4,354. 352. How much was your initial investment guys? Initial investment guys was 80 lakhs including working capital. Therefore your NPV beta is 2 lakh 4,352. Should you be accepting the project? The answer is yes. So all the past batch students also, I hope you got the point as such guys. All you have to do guys is remember, if there is no taxes then it doesn't matter as such beta. Yes, some explanations are not that relevant, but I've already given a note in the previous batch also. By default nominal cash flows at nominal rate. Here we are doing real cash flows and real rate because it is specified in the question. So if they ask us to do it in real terms and there are taxes, do not forget to remove the impact of inflation from tax savings and depreciation first and then discount it at real rate. How will you remember this? Pretty normal. Every question that we have done was in nominal terms at nominal rate. We never adjusted tax savings on depreciation with inflation separately. That means it is already a nominal cash flow. All you have to do is remove the impact of inflation from that and then discount it at real rate to get the answer. The same logic applies for your क्या बेटा ये दूसरा वाला working capital realization. Anything guys that you're investing today and is expected to be constant, your job is to first remove the impact of inflation and then discount them at real rate. Are we clear about this guys? Any doubt in this? समझ में आ गया बेटा? Now I'll just give a little note as such guys in the concept notebook and then we will come back to this. Then I'll break the class in a part. It will be easier for me. Write the heading better as capital budgeting with inflation. Capital budgeting with inflation. So basically guys, the concept has been revised over time. Earlier we used to consider the same amount under both real as well as nominal discounting as far as tax savings and depreciation were concerned, but now we no longer consider the same amount. What are they doing is, for nominal cash flows they will consider tax savings and depreciation as it is, but for real cash flows they will first remove the impact of inflation from tax savings and depreciation. That's it. Write down guys, capital budgeting with inflation. By default, for all present value computations, by default for all present value computations, by default for present value computation, we consider nominal cash flows. We consider nominal cash flows. We consider nominal cash flows and we discount them at nominal rate. We consider nominal cash flows and we discount them at nominal rate. We discount them at nominal rate. Discount them at nominal rate. Alternatively, we can also consider real cash flows. We can also consider real cash flows. We can also consider real cash flows and discount them at real rate. And discount them at real rate. Discount them at real rate. उसके नीचे बेटा 1 plus nominal rate is equal to 1 plus real rate into 1 plus inflation rate. As an example beta, if real rate is 10%, inflation rate is 5%. What will I write? 1 plus nominal rate is equal to 1 plus 10% into 1 plus 5%. And that will be equal to 1.155. So nominal rate will be equal to 15.5%. The same concept that we have learned under Forex. Nominal rate, guys, will be equal to 15.5%. 15.5%. After you arrive at this nominal rate, is that better? Next. Let's say year 1, guys. Real cash flow 100 rupees. So what will be the nominal cash flow, guys? अगर रियल कैश फ्लो ईयर 1 का 100 है बेटा, नॉमिनल कैश फ्लो कितना हो जाएगा? How much should I add? Inflation 5%. So it will become 105. The present value, guys, will be 100 rupees. I should discount at what rate? 10%. Or 105 I should discount at what rate? 15.5%. Can you compute the present value, guys? 90.09 beta, and this is 90.91. 90.91, guys. Next wala beta, 90.91. Why this example? To tell you that whether it is real cash flow or whether it is nominal cash flow, beta, the present values should remain same. लिखे बेटा. So write नीचे क्या लिखोगे guys? So whether it is real cash flow or nominal cash flow, the present values should remain same. So whether it is real cash flow or nominal cash flow, the present value should remain same. Whether it is real cash flow or nominal cash flow, the present values should remain same. Next line. Depreciation is an apportionment of historical cost. Depreciation is an apportionment of historical cost. Depreciation is an apportionment of historical cost. Historical cost. So tax savings on depreciation will not increase year after year. Tax savings on depreciation will not increase year after year. Tax savings on depreciation will not increase year after year. By default, it will be a nominal cash flow. It will be a nominal cash flow. It will be a nominal cash flow. So if real approach is to be followed, if real approach is to be followed, if real approach is to be followed, real approach is to be followed, real approach is to be followed, we should remove the impact of inflation from tax savings. We should remove the impact of inflation from tax savings and then discount at real rate. We should remove the impact of inflation from tax savings and then discount at real rate. And then discount at real rate. Clear about this part, guys? Yes or no, guys? Next, better. Example. Example. Let's say, guys, cost of equipment 50 lakhs, life 5 years, depreciation per annum 50 lakhs by 5 years, better 10 lakhs, tax rate 30%. So tax savings will be equal to 10 lakhs into 30%, 3 lakhs. What will you do, guys? Under nominal approach, directly discount. Under nominal approach, directly discount 3 lakhs at nominal rate. But real approach में क्या करोगे? Under real approach, what should I do better? Adjust 3 lakhs for what? 3 lakhs for inflation. And then discount at? Isn't it the same answer, guys? It is as good as directly discounting 3 lakhs at nominal rate. And then discount better 3 lakhs at nominal rate. Sorry, real rate. Then discount, guys. 3 lakhs मत लिखो बेटा, वो जो भी उसका present value after removing inflation आता, and then discounted at real rate. Are we clear about this? That's it, guys. Let's shift back to the other notebook and start writing this question. Pass batch students, I hope you've all understood. Breaking the session.